Hey everybody, so I want to talk to you about one investing strategy I cannot recommend. I just cannot do it. And I warned before in a previous video about credit spread. So I think just as a public service, people I doubt there's a video that exists like this on YouTube. So I'm gonna be the one that does this video, which is do not invest in Forex. Just don't do it. I don't know anybody who's made any money doing it. Literally, 96% of Forex investors lose money and end up quitting. So I want to talk to you why you should not invest in Forex. Now, for people who don't know what Forex is, it's the trading of currency pairs. So it's like you buy the dollar, you'll go long the dollar and short the euro, or you'll go long the yen and short the dollar. Forex trading is mostly used by people who've been investing for a while, and if stocks are like weed, Forex is like cocaine and heroin. It's combined. It moves fast. There's a lot of margin. But I really want to talk about why it's so dangerous. And I already stated 96% of people, and you could Google this fact and check it, of Forex traders lose money and end up quitting. And here's why Forex is so tempting. There's very little startup capital you need. To invest in stocks, you need a couple of $1,000s. Crypto, you probably don't need as much. You can probably spend a couple $100. Same thing with Forex. You only need a couple of $100 to get started up. So a lot of people are like, hey, a couple of $100, I'll just start up. But and also people are tempted by the fact that there's no commission cost. You're basically paying the spread, because that's how the Forex brokers, they get a tighter spread, then they give you a little looser spread, and then they make money on the difference between the spread they get and then the spread you pay. So people are tempted, low startup capital, no commission costs. I can make a lot of money very quickly. Here's the problem. At these Forex accounts, you are leveraged between 10 and 100 times, which means if you put, let's say, $500 in a USD euro, you put $500 in. If the market moves against you 1%, you're not losing $5 or 1%. You're losing $50 or 10%. And if you have one of these weird Forex brokerages that give you 100 times leverage, if the market moves against you 1%, you're wiped out. That's a 1% loss leveraged at 100 times. That's a 100% loss. Your account is closed, and a lot of people don't realize that. Forex trading is also designed for very, very short-term trading. I mean, a couple of minutes. Markets move very quickly, and unless you're a professional currency trader, you're literally a guppy swimming in a shark tank, and you'll get eaten up alive. Another problem is a lot of Forex brokers that are online, a lot of them are frauds, and it's very hard to tell the US licensed Forex brokers from the fraud Forex brokers, because 90% of people lose their money doing Forex. It's kind of like opening a sports betting site online. You know that the people put their money in, they're never going to pull it out. So a lot of fraudulent people will open a Forex brokerage that's not licensed in the US. Your money's not secure. They may offer you 100 times leverage. And if you lose your money, you lose your money. And even if you win, if you're one of the 4% that wins, they may not pay you out because they're not a legitimate brokerage. They may be, somewhere in Eastern Europe, and then, good luck trying to get your money out of Romania. So I don't like Forex. I don't recommend it. I've tried trading it a few times, and the few times I've traded it, you lose money as fast in Forex as you would in a casino, because it is like a casino. In fact, it's a lot like Forex brokers are a lot like with there was something called bucket shops that existed in the United States in the early 1900s, and bucket shops were a lot like sports betting parlors. These were people who would let you buy and sell stocks like Coca-Cola or General Electric at 10 times leverage. But these bucket shops, they were not legitimate licensed brokers. They never bought the stock for you. You were just betting, but because it was 10 times leverage, they knew that 90% of their customers would lose all their money, so they didn't have to worry about paying people out. In fact, so few people made money in bucket shops. The few that did became famous. One of them was Jesse Livermore, who was a famous short seller who ended up going to Wall Street. He started trading in bucket shops. He was actually one of the kids who drew the charts and kept track of the numbers, the stock quotes in the bucket shops. And because he was a little kid watching the stock prices, he instinctively knew how stocks move. So he was able to beat the bucket shops at their own game. But a lot of people who put their money in the bucket shop did not start out, writing stock quotes when they were 12 years old. So essentially, Forex, at the very best, you have a 96% chance of losing your money. At the very worst, you're putting your money into a scam company that no matter whether you win or lose the trade, you're going to lose your money anyway. So if you really want to trade currencies, if you have an instinct that the dollar is going to rise or fall, just look at the currency ETFs. They're all over the place. You could buy those and sell those as simply as you would buy and sell a stock. So, just a great warning to let you know, in case you feel tempted into going into Forex trading, just stay away. There are easier ways to make money in the investing world than Forex, okay? Hope you enjoyed this video. If you did, please like, share, and subscribe, okay? Thank you very much. Bye.